Stock markets in Europe are trading a little lower this morning, with the UK's FTSE 100 index off around about 16 points, while the Euro Stoxx 50 index is lower by 6 points. US stock futures are currently trading flat, and when it comes to the FX space, it's very subdued at the moment, with the dollar beating its rivals. When it comes to the commodity space, gold is trading a little higher at the moment. Oil prices continue to ease. We have Brent futures now about $109 per barrel, and NYMEX is down while trading at around about $106 per barrel, as fears about a military strike in Syria have receded quite a bit since the US and Russia have proposed to disarm Syria of chemical weapons, and Syria have complied so far. Other than that, into other asset classes such as peripheral bond yields, Spanish, Italian and Portuguese bond yields are a little wider across the board, but nothing to be too terrified by. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So yesterday we had a pretty downbeat session in Asian markets, which have played onto the poorer open that we've had in Europe. The big driving force behind this is, of course, some of the hesitation that we're getting ahead of the two-day policy meeting by the Federal Reserve. It starts today. We have an announcement tomorrow with a press conference. There are many in the market that believe that the Federal Reserve will start its first round of tapering tomorrow. Economic data in the US supports that view. We have seen a solid upswing in US economic conditions over the last few months. At the same time, the labour market progress is somewhat slow. It's encouraging, but not fast enough for others in the market to believe that the Fed will start tapering tomorrow. So it is a bit of a mixed view. We're very divided on the whole. I'd say most people are of the view that the Fed will taper. However, some do believe that there's a few more months before the Federal Reserve can actually start initiating that process, given the fact that they need to wait till the labour market actually clears up a little bit and improves in a way that they can actually start being comfortable with letting go of quantitative easing. Nonetheless, it's a massive risk event for us in the market. We are really looking forward to that. It's going to basically put the gears into motion for any sort of tapering activity, because we should hear more from the Fed in regards to how they see tapering, whether they start it tomorrow, if they wait a little while longer. At least we'll get a better indication. That's something that we've been really missing, the fact that we haven't had any indication that the Fed is going to start tapering, and when it's going to start tapering. It's been very convoluted. Messages have been very vague from Ben Bernanke, the head of the Federal Reserve. At the same time, Ben Bernanke's been under the spotlight, as the US government are now attempting to appoint a new Federal Reserve chairman. We had two front runners, a chap called Lawrence Summers, who was seen as extremely hawkish and for monetary tightening a lot quicker than the market expected, and Janet Yellen, who is also a FOMC member. Now, Mr. Summers has left the competition, leaving Mrs. Yellen still at play, and she's known to be a bit more softer on monetary policies and keeping it a bit more ultra loose compared to Larry Summers. So the market did respond very positively to that news yesterday, and we're seeing a bit of a profit taking on this morning on the back of the hesitancy of the Federal Reserve policy meeting. We've also got a number of economic data points to look out for. Inflation figures from the UK, the German ZEW survey coming out later today. We also have inflation data from the US, and we have the housing market report. That is all for your daily market bite. Tune in for another one tomorrow, and we'll be discussing more about what the Fed may possibly do at the policy meeting. Cheers.